Welcome to the July Galileo Capital Monthly Update. Nothing's happened in the last few months at all. It's been a very boring few months in South Africa and in the world, and there's almost nothing to talk about, Sherelee.
Yeah, almost nothing. I think I was listening to Theo and Pragnesh's recording from last month, and they were just warning about the volatility that would likely follow after the election results. And I think we've certainly seen that unfold. We've had the Aussie hitting an all-time high, and the rand has strengthened at the time of the recording back to below 18 rand to the dollar. So we've certainly seen that come through. And I think that was one of the first hurdles we needed to get over, in this very political year that we're in. And I think then the second thing was to see if Cyril would still remain in as president, which he was sworn in, which is good for the reform agenda continuing. And then I think the next thing that we need to look at is how the cabinet will be structured. And at the time of recording, again, that hasn't been done as yet. But what do you think that our thoughts are around that?
It's one of those things where it's almost the analogy I could think of is this election outcome. We were faced with a fork in the road, and we could either go left, and left was immediately off a cliff into real disaster, or we could go right, and that's not political left and political right. It's just left and right. And what we've done is we've taken the first two steps on the correct path. And just understanding that at the early stages of this whole government of national unity, otherwise known as the wildebeest, Sherelee, it will be about not standing on landmines. So it's not so much that we have to make fantastic decisions as a country. We just mustn't stand on landmines. And that's what we're talking about when we look at the cabinet, is the composition of the cabinet going to reflect that the weighting of the different parties in the government of national unity? If it does, then all good and well. I think what we need to do is be careful of gross optimism or gross pessimism. I think just in the first few days post the election, all the conversations we've had with friends, family, and our clients, the kind of conversation has started with the election result was good, but Cyril's president, but and all of that is a reflection of the last decade or two of mismanagement. So we're kind of programmed by circumstance to kind of deal with bad news and to disregard good news. I think what we need to do is just say to ourselves that this government of national unity is not a clean, clear, easy kind of arrangement. It is a difficult marriage, and it's certainly going to be characterized by a lot of infighting for a while, and possibly for the entire term of the government of national unity. So I'm waffling a bit because we don't know the outcome of cabinet, and I think just to say, it's probably not as good as, it won't come out as good as we would hope, but potentially not as bad as it could be. And equally, if one or two politically bad kind of outcomes arise, that Patriotic Alliance is in, or even they spring a surprise and Julius is in, it's not necessarily the worst outcome you can think of. I'm not saying that we think that that's a great outcome. Just understand that, if there are now counterbalances and countermeasures, then some of the most radical ideas on all parts of the political spectrum will be disregarded in favor of the most centrist policies. And that's really what we're hoping for, is kind of the most centrist policies get implemented. There is entire agreement between the DA, the IFP, and the ANC on the reform agenda, getting the crime under control, getting the economy to continue the restructuring that has already started. So if they just focus on those issues and they kind of agree to disagree on the balance, I think for the next 4 or 5 years, that will be a good outcome.
Agreed, Warren. And I think that volatility is still something that everyone should just be mindful of in the coming weeks and months ahead. I think also something that's really important for us as a business is we always like to just chat through some of the positives that are happening around us. And two of the green shoots that I thought we could maybe just briefly speak through are just around, number one, the fact that we're sitting here with the lights on still, even though I think many people thought that we would be back at load shedding after the elections. And then secondly, the recent announcement that Transnet has favoured Grinrod to be their bidder of choice for the port in Richards Bay. Do you maybe want to shed a little bit more light on that?
Yeah, I love the dad joke there, Sherelee. Well done. Let's talk about Eskom first. No matter what, no matter where you are on the political spectrum, no matter how cynical you are about Eskom and the recovery, it's now a statement of a fact. It's not there's no political shenanigans, where the government was forcing tens of thousands of employees at Eskom to all work on some grand scheme that was hidden from everybody, to keep the lights on artificially leading up to the election. What happened was the lights stayed on because some things are starting to go right within Eskom, and secondly, that private power production is becoming an increasing factor in the entirety of the electrical system in South Africa. So we can see that now, because in the first 2 months of Eskom's financial year, they've spent something like 6.6 billion rand less on diesel. That's not a manufactured number. That's a reality. That's an audited number. And the other thing that we can see is the demand for power has reduced. Now, that is partly an economic thing. So that's partly that there are there's less manufacturing, less demand. But even more so, it's because more and more private companies are producing power for themselves and not requiring it from the grid at all. So I think we have to say that the reforms within Eskom, although slow, although decades late, etc., are having an impact. The energy availability factor is around 60%. They wanted to hit 60% in December 23, but we're here now and we are there. The aim is to push that to 70%. If they get to 70%, it means no load shedding at all, with some scope for kind of emergency power as required. So I think we need to acknowledge that that's come right. I mean, I think we've said it a few times as Galileo that we think load shedding is not a factor by the end of 2024. If there is any load shedding in 25, it's most likely, the odd stages of stage 1, possibly stage 2, but very unlikely. And that's proving to have arrived a little bit earlier. I'm absolutely convinced that the day after we publish this recording, we'll probably have load shedding, because that's how Murphy works. But we need to acknowledge that the trend is certainly on the way up, and that has a huge GDP impact. In other words, it pushes the entire economy, into a stage of growth. It could be as much as 1.5% GDP growth when we just have no load shedding. And anybody who runs a generator, whether it's at home or in an office park or for a business, will tell you that that's a phenomenally expensive exercise. So just getting off generator power, being able to drive, from home to work without traffic lights being out, all of those things, has a huge impact on the economy. Then you mentioned and I think that they're never going to use the P word, privatization. They're going to use the C word, which is concessioning. And so the Richards Bay port is really a coal terminal. It's not really to now been designed to handle container traffic. And so it does handle some container traffic, but the concessioning to Grinrod now means that they as Grinrod and a consortium will invest a large amount of money to build significant capacity, container capacity within Richards Bay. That gives more kind of container traffic through South Africa, because we've already got Terminal 2 at Durban being concessioned, and we now see this Richards Bay port being concessioned, and we will see more of those around Cape Town and potentially some new ports being built. So again, that's very long, drawn-out process. It's a very slow reform, but it does have an impact. And just between getting Transnet right and Eskom right, we could see GDP growth back at 3% a year. That's not going to absorb employment. In other words, we're not going to see unemployment reducing rapidly because of that, but we only need another 1 or 2% above that. Our estimates are that we need 5% GDP growth for the economy to start absorbing unemployed people. And if we get to 60% of that target just by doing simple things right, then maybe 1 or 2 slightly more difficult things can happen, and we're on our way to a positive spiral. So it's not a prediction. It's just a case of saying, let's acknowledge that some things are going right, and the news doesn't necessarily reflect that.
Agreed. And as you always say, we're specialists at not predicting. So we'll stick with that. But I think another important point that clients are asking a lot about at the moment is just with regard to the US elections that are coming up in November of this year, and what that might look like, for the rest of the world and not only just Americans.
Yeah, so it is a tricky election. Polling right now is showing that Trump will kind of walk into the presidency. What we know about polls is that they are notoriously fickle, and are subject to change. So although the polling is happening in June, July, we need to kind of be clear that the election only happens in November. And a lot can change between now and then. So if the polls are right, then Trump comes into power. What we know about Trump's last presidency was he was enormously destructive for the social cohesion of the US. He was enormously destructive for kind of global cooperation. He's almost a protectionist in his outlook. It's America first, second, third, fourth, and fifth. And whatever he does from a foreign policy point of view will be all about America. Having said that, he also immediately cut taxes in the US and did what he could to kind of protect and favor business over social reform. So if that continues, then he's likely to be business friendly for America, anti-business for people that want to export to the US. And if you are the president of the Ukraine, you would want your conflict resolved before Trump comes into power, because I can't see how he will spend $1 on aiding the Ukraine at all. Just look at his wife, Trump's wife, and his connections, and you can see that he's not super in favor of isolating Russia at all. And so I think there is a bit of pressure on the world to resolve the Ukraine conflict before. Putin's not stupid, so he's going to stall and do what he can to support the Trump campaign. And that's the kind of politicking that will happen. So I think conflicts will be resolved fairly quickly, but maybe not in a great way, but they will be resolved if Trump comes in. And I think global businesses might suffer somewhat, especially multinationals outside of the US. But if he keeps the economy going and does what he can to stimulate economic growth in the US, that could be good for the US, which will be good for markets in the short term. It might sow seeds for future disaster, but that's a long time out.
Thank you, Warren. Yeah, and I think it just highlights with everything that's going on around the world, that focus must remain on what you can control as an investor. I think there's just too much right now to try and juggle things that just, you have absolutely no control over. And I think that the big part of that is then reaching out to your financial planner when you do have questions or concerns about many of these factors that we've discussed. And I think also just remaining focused on your investment plan. Because I think, the talks around the BRI and all of those types of things are unfolding all the time. And I think it just really needs to be a time of focusing on what your long-term plans and goals are.
Yeah, 100%, Sherelee. I think it's our job to manage that relationship between risk and reward when we're building portfolios. We don't know always what the risks will be, but we've built the portfolios for our clients to tolerate risks. I think it's the only investment promise we still make, is that we promise to lose you money from time to time. Over long periods of time, we certainly believe that markets will grow, and it's certainly the thing to kind of always remember is that when you're looking at predictions and forecasts and all of that. Just understand that your predictions are fraught with the potential for error. If I just think about two big elections that happened at the same time, we had the Indian election and the Mexico election. The Mexicans, elected a president with a 2/3 majority, and the markets absolutely fell apart in Mexico. At the same time, the Indian Prime Minister was re-elected, but with a much smaller majority than he had last time, and the markets fell apart. So in two cases, two elections with differing majorities, and markets reacted completely opposite. And just whatever happens in South Africa and in the US, the outcome of the election is hard to predict. The reaction of people to that outcome is also hard to predict, and then the reaction of investors to all of those reactions is nearly impossible. So developing a strategy that suits your requirements, your long-term goals, is easily the best way to insulate yourself from the error of predicting or forecasting, and rather keep that for fun discussions if that's what you find fun, but don't make those your long-term investment drivers, because you're almost certain to be wrong. And then just lastly, to show you how fickle the world is, the misfortunes that are facing Mexico now are certainly benefiting South Africa. Foreign investors that are looking for high interest rates for quite some time have been parking their money in Mexico, and earning interest in Mexico, because they felt that was the most stable, most liquid, growing economy. And immediately after that election result in Mexico, money started flowing into South Africa, into what they call the carry trade. And then the election results in South Africa happened as well. So just to show that whatever the bad news will be, because South Africa will face bad news again, it doesn't mean that necessarily that the worst outcomes happen from an investment perspective. I think that's me, Sherelee. I've spoken enough.
Thank you, Warren, and thank you for all the insights that you've shared with us.
Thank you so much.